Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Well, first off, want to say thanks to those of you that stuck around yesterday for our option session. We had interesting discussion about how to approach the next couple weeks of trading, both from like an earnings perspective, also kind of like maneuvering in what could be like a really uncertain, volatile couple weeks, right, as we get into the election. And this is unusual. Well, first of all, obviously, presidential elections only come around every couple of years, or every 4 years, to be precise. But also, this election is obviously much different than even elections in the past. So there's a lot of uncertainty, and when there's uncertainty, then you do see risk off selling or risk off action. And we've noticed, in addition to like stocks getting hit, you're starting to see the VIX come to life. A lot of like back and forth with like the stimulus headlines, right? So it seems like we're setting up for what could be kind of just like a rocky couple weeks. I mean, it doesn't mean we're going to fall apart, but it also doesn't mean we're going to rip right back, right? So you got earnings, you got stimulus talks, you got the election, and one of the things we spent some time going over is just the idea that it might be smarter to be a little bit lighter with the trade so you can maneuver, right? Just like generally like just, cut the risk back a bit, but also have some hedges in place, right? So whether that's Qs, spiders, whether you want to do like index or ETF specific hedges if you're, looking at like certain sectors. Um, I feel like it probably makes sense, especially now because you have like a fixed date on the calendar where you think that there might be greater volatility into. Um, you could look at like a VIX, right, or the VXY, because that's one of the main issues I have with trading options or trading these products in general, like the VXX, the UVXY, is that you don't really ever know when the volatility is going to kind of explode, and because these instruments are double or triple leveraged, they just keep decaying. So just they're tough to trade, like the actual underlying, but also the options are tough to trade because they always carry like high premiums. But now, because you have like this fixed date on the calendar with election day, which is just about 2 weeks. Well, it's actually 2 weeks out. At least now you have like a window where you can like reasonably say like I think that there's going to be higher uncertainty. I think there could be higher volatility, and it actually does kind of make sense to maybe potentially look at like a VXX or UVXY bullish option trade, right? So when when I am like kind of setting the targets or setting like the strikes I want to go at, then what I use is basically what I use for a lot of different trades, and it's like the significant levels of resistance, moving averages, etc. And what's nice about the VXX is that you can see that it's been in a pretty well defined channel really since like March, and it started to roll over, right? So it has had resistance at the top of this channel a few times, and I mean I think you could even potentially use, just draw these down here. So you could even potentially use the move from September as kind of like a gauge of like how you want to design the structure of this trade. So like a bull trade. So whether you want to just do straight calls or even like spreads, which is what I like to do sometimes, is to kind of like manage my premium better. You could say like I want something a little bit closer to the money because the moves do tend to be quick and often fleeting, right? They rip fast and they come right back down, right? So if you get an uptick in VIX, it often is like fast, get uptick in VIX, and it comes right back down. So what I'd be thinking is something closer to the money, and then if it can get through this cluster area, so right above 25, then you're probably looking for a move into like the high 20s, even potentially like the 30 area, right? And that lines up with like the moving averages. So like that would be kind of how I determine like the strike levels and the targets of the option strategy. And then like just one tip I have when it comes to that is I try to always exit into strength. Um, and if I don't get the top, that's fine. Like I'm comfortable like not having like the absolute top tick of the move. Because what I've found in the past is like if I stick around too long, if I err on the side of trying to get the absolute perfect exit, then I risk having the thing reverse because the moves tend to reverse pretty quick. So what I like to do is exit into strength if I can. So You know, when it starts to move, when it starts to really pick up some momentum, when it starts to pick up some volume on the options, that's typically when I'm trying to exit. And you know, again, like if I don't get the top tick, that's fine. Like I can live with that. It's just having traded this in the past and seeing the way it acts, right, where it pops and then immediately retraces. I just don't want to be caught sticking around too long because I've seen the moves just retrace over and over and over again. All right. So again, I think got to buckle up. I think we could be in for like a very, very, very busy couple of weeks. I think there's going to be a lot going on. I think there's going to be a lot of stocks moving, and I think there's going to be a lot of trade opportunities. All right. So if you like this video and you're looking for more information on option trading or maybe more information on option hedging or hedging with options, please follow up with the link in the description of the video for more information on options to play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.